What are rates doing in 2025? Well, you're going to want to stick around to find out. Hi, this is Denise from Vivid Lifestyle Realty, your go-to source for all things real estate and lifestyle in beautiful Corona, California and the surrounding areas. And today we're going to dive into a little bit about what was happening with rates at the end of last year. It feels funny to say that. Happy New Year, everyone, by the way. 2025, I hope, is going to be your rock star year. So anyway, we're a little bit about what happened to rates at the end of the year and a little bit about what's happening with rates and the market in the upcoming year, kind of what economists have laid down and kind of are going off of. The last few years, we all know the rates have been very volatile, ever changing, from inflation went down and then crept a little bit back up. It's not skyrocketing back up or anything. It's just going up and down a little bit. And then also the 10-year Treasury has crept up. So rates, when you're looking at rates, people think, oh, well, the Federal Reserve they dropped rates. So, oh my gosh, rates drop. And that's not kind of how it works. It goes off of what inflation is doing, what the 10-year Treasury is doing, what lenders and banks have anticipated, what the bonds are doing. So it kind of is a combo of different things. But yes, usually the Fed will they don't set the rates, but they guide them. And so it has been very interesting where we were almost down. Everyone's like, this is the year of the fives, 2024, go get it. And that's not what happened. And you can listen to economists and all the different people that I follow that are very educated. These last few years, I've never seen things fluctuate and really take turns, even and have them they'll state something and then they change their mind. Even when you have people that are monitoring kind of whether the Fed is going to lower rates, it would be a 70% chance, a 60, a 40, a 60, an 80. So it's been all over the place, as we know, living in it, feeling the pressure of all of the higher prices and the homes just, not really dropping in California and inventory staying low. It just kind of feels like you're stuck. We're in a glue period where we're kind of just stuck there, and it goes down a little bit and people get excited. It goes up a little bit, people get a little bummed. You just have to kind of know that if you're hoping for rates to be in the high fours or middle or low fives, 2025 is probably not going to be your year. They're even saying going into 2026. So like I said, we can just educate ourselves, look at all the economists and different things, but things are ever changing, and this is kind of where we're at. So when the Fed first lowered their rate in like September, actually the rate went up. We were almost down to under 6. It was like 6.02 or whatever. And then it actually increased. And then it kind of kept increasing. So they lowered them again, a quarter of a point, 0.25%, and it still went up. And then they lowered it again, 0.25%, and it still went up. And so now we're looking at pretty much back to where we were, at the beginning of 2024, where we're a little bit over 7. And it is teetering between, high 6s and low 7s. And when you take in consideration, the election and the winter and all of these different things that kind of, can make the market a little extremely more volatile, things should be at least evening out a little bit when we head into spring 2025. And so it's still early, and I definitely update you guys on everything that I hear, whether things change or not. But I don't just give you guesstimates, I give you what is out there. And so whether it's Fannie Mae or Freddie Mac or Zillow, as far as, different things that the rate or Core Logic or, on and on. All the things that I look at, you just really have to, like I said, things are ever changing. You could have a client that wants to buy and you could say, rates are 6.6. Okay, hurry up and go buy because next week they might be 7, so, and like a quarter of a point, half a point, all of those things really make a difference in your mortgage payment, whether it's $300 or as you go higher, it could be $1,000. Like that makes a big difference for people. And it makes a big difference for sellers that have a 3% mortgage rate that are going to sell and then buy somewhere else. But like I always say, you can marry the house, date the rate. If you love a house and you have the means to do things right now, that is really great. I use the example when we bought our first home many, many years ago. We were young and we were first-time home buyers. Our rate was 7.5%. And we used a VA loan. My husband was in the Marine Corps for 8 years. So we were like, okay, great. And so as we're going through that, we're like, we didn't know. We were like, okay, that was way before real estate and everything. So you just say, okay, that's what rates are. And we anticipated that and we prepared and we talked to a lender and we saved up, and that's kind of what it is. You don't just wake up one day and say, hey, it's kind of a process. You have to ready yourself for what, save up as much as you can, make sure that you have everything in order, that you're not making too many big purchases before you're going out to buy a home. And then also you want to make sure that you are just giving yourself the best chance, like pay off some credit cards or make payments on time. All of those things affect your credit and affect, your readiness to purchase. And then you definitely want to speak to a lender and make sure that you are, you know where you're at, you know what you're ready to do, you know what you can afford, and those things will really help you to set a guideline and to save and to do what you can to have your best shot at, being a homeowner, or even purchasing your next home. When you're selling and you have a 3%, if you're going up to 6.5% or 7%, you need to know, okay, I can afford this now, but it'll be really great when things in the next year and a half or so start dropping and we refinance. It's actually going to help us out. So you have something to look forward to as long as it is possible and you can do it and you're not stretching yourself too thin, because no one wants to be on the cusp of where you're working so hard and you can barely afford to do anything else, just make your house payment. That's not the situation you want to set yourself up. We've all gone through ups and downs. We'll all hit that where someone loses a job or gets, a pay cut or whatever the case may be, and you kind of work your way through that. That's kind of the same thing. As it's like, if you can do it now, it's a great time to buy. This is going to be the first time in 2 or 3 years where this spring season should really be a great time for people to buy and sell. Kind of knowing that rates are not really going to go in a big, they're not going to dip down so much where you're going to cheer and have a celebration, so they're going, it's kind of been stuck. It's anticipated that it's going to stay stuck. And they said we could go in the, lower 6s or mid 6s, but the next week after that, like we were there and it shot up to 7, and then we were there and it went over 7. And so you just have to watch the market. You need to, if you're looking to buy or sell, you need to have an educated real estate professional that's going to guide you through that, like truly to make a win-win, that they're going to tell you what rates are doing. They're going to help you, guide you through it, and know that it can't stay this way forever. So whether it's 2 or 3 years down the line, rates are going to drop. It's, it's cyclical, and so they are going to drop. It's just really sticky and glue-like right now, where things are very volatile still. And like I said, we're right there with inflation. You see gas prices dropping at a great rate. There's more coupons and there's more people offering deals just as the market is evening out. And so, like I said, you just have to be positive that 2025 is going to be, like I'm saying, positive as mental state going into 2025 to make sure that, you know, your mindset and everything is good, and that if you have the means, it is going to be a great season to buy and or sell. And also, with everything going on, you want someone in your corner that's going to have your back for sure, whether that's us or your trusted real estate professional you've used for years. But you want to make sure somebody has your back, that they're not just coming in there for a job or a transaction, that you are a person and you matter. And little things like a 1/4 percentage point drop or things like that, really, negotiation skills are really important right now. Doing things for the right reasons, going above and beyond for each client. That's just what should be expected in this year to come, in 2025 going into 2026. So it is unlikely that rates are going to make any drastic movement. They're kind of going up and down, up and down, up and down. And they're saying at 2026, you know, is when we should see some actual relief and get out of the sticky state. So I just wanted to let everybody know that, you know, just stay hopeful, stay positive. Things are going toward a better year. They are. We cannot pretty much have a worse year than we've had last year and the year before. So with things being so great, the first, you know, 2020, 2021, 2020, in the beginning of 2022 to now, it just shows us we are resilient. Things will get back to a little more, they'll even out and things will be brighter. Just keep your head up, keep saving, and make sure you have people in your corner. Like, we're here for questions. We're here to answer things about the NAR lawsuit or settlement. Whatever you guys need, we're here to be a resource to answer questions, to provide things for you like net sheets or buyer guides or seller guides. So please don't be afraid to reach out to us. We don't bite, I promise. And we're here to help you on your journey, whether it's as a buyer, as a seller. We're in a lot of different, you know, a lot of different things are happening to the real estate industry in the world of buyers and sellers, and we're here to answer those questions and be your guide and help educate you. But like I said, right now, I'm just going to kind of go over right now, today, what the rates are. So rates today are 7.10% for a 30-year fixed. And you have to keep in mind too, people just say rates. That's a lot of times top tier. If your credit is really good, if you're, you know, you can get some of the top tier levels, and your debt to income ratio is great. It can be higher than that if your credit score goes a little lower. But there are programs as well out there like FHA loans and etc. And then for a 15-year fixed, it's 6.49%. So that's looking really good if you're in the market if you're refinancing or you're looking to do a 15-year loan. That's a much better place to start out. So that's not too bad. And then, so it went up in the last few days, 0.03% for the 30-year fixed and 0.02% for the 15-year fixed. Now, if you're doing a 30-year FHA, the rate is around 6.42%. Like I said, all of this depends on your credit report, your debt to income ratio, and etc. The 30-year jumbo is 7.34%, which all of them have gone up, they have crept up just a bit. And then for certain ARMs, it's about 7.04%. And then the 30-year VA loan is 6.45%, and all of them have increased slightly over the last few days. So you just want to be mindful that if you are trying to purchase or sell, that you're looking at the rates, and you're keeping mindful that you're reaching out to a trusted real estate professional that can help guide you and kind of let you know what the rates are doing. And lenders are a really good source. We have a lot of great lenders to choose from. I always have people pick multiple vendors or multiple lenders, and they can interview them and see if their personalities mesh and who is right for them. But we do have a lot of different preferences and different things to hand out to you guys, and then you guys can really interview and see which ones work best for you and fit best for your lifestyle and what you're looking for, because every lender and vendor does things a little bit differently, and I want one that fits and speaks to you just like your agent should. You want somebody that's going to mesh with you and have your back and want to create a lifelong relationship, not just a transaction. And so I just wanted to kind of let you guys know that even though it looks like it might kind of stay the same, I'm hoping for spring, when I'm looking at everything, that rates will drop down a little bit, but this is kind of where it is right now. So if you have the means to buy, or if you're going on the market, like with my listings that are coming up, I'm going to put them, I want them to list prior to talking to them too, whatever's best for them. But I said, you know, the best time is kind of right at the end of January, early February, before the spring market hits, so that you're out there, all eyes are on you. You can do coming soon. You can market after you're coming soon. I can market to the 90,000 agents globally at my brokerage, EXP, and then you have them in a good position where you can put ads out. And then when the market hits, man, and people start coming out of the woodwork and they're tired of waiting and they just want to transact, knowing that they can refinance down the line. It is a much better and a great place to be, in a much better start than 2024 started out. So I wish you guys the most amazing 2025. Keep your head up. Everything's going to even out. We're all going to make it through. We've made it through the last, 5 years. Can you imagine, since COVID started? Can you imagine, like, just the hope and bright light that 2025 is going to bring? I just wish you all the best, you and your family, and I hope that this information helps. But we are here for you if you need us. Please don't be a stranger. You can reach out. We're here for you. And you can check out other YouTube videos that will go in depth into markets or the things that Corona and the surrounding areas have to offer. We just have so much, whether it's new builds or construction or et cetera, et cetera. You can go check that out and kind of go down the rabbit hole on our YouTube channel. And then also, if you want to check us out on Instagram and Facebook, you can check us out at Vivid Lifestyle Realty, Vivid Lifestyle Realty, sorry. And then if you want to check out our website, it's vividlifestylerealty.com, and you can do property searches and reach out to us so we can super customize them for you. We can give you buyer guides, seller guides. We're here to help navigate through, these kind of very fluctuating times. So also, if you find videos like this helpful and interesting, if you could please subscribe, we really, really appreciate you, and it really helps us so we can put more videos out like this. And I just wish everybody a wonderful, wonderful 2025. I hope it's magical, and that, some of those dreams and wishes that, haven't come true yet, that this is your year. So we really appreciate you, and we'll see you on the next one.